Nancy Pelosi is well known for her stock picks, and she just disclosed some big trades. This one is very interesting. Former House Speaker Pelosi just purchased 50 call options for the energy company Vistra Corp with a strike price of $50 set to expire early in 2026. Vistra Corp is a prominent energy company in the United States. They operate in the electricity generation and retail energy markets, which are both essential and growing. The gradual transition to renewable energy provides them with sustainable, long-term growth potential.
So let's go through some of these names. Vistra, you've just upped your price target on significantly.
Yes. Vistra, big Texas-based power generation company, lots of different types of power plants, and they have a nuclear power plant in Texas that we think is ideally situated for a lot of additional data centers to be built right there.
The U.S. energy market alone is worth trillions of dollars, and Vistra Corp is positioned to capture a significant share of that market due to its large, diversified portfolio. Rising energy prices that stabilize at favorable levels would benefit Vistra's revenue, especially if it can capitalize on high prices through its generation and retail energy operations. Any regional energy shortages or disruptions in the supply of traditional energy could lead to higher prices, which increases Vistra's profit margins.
Vistra Energy is a little bit different than most of your utilities. This is not a grandma stock. This is a utility that owns power plants, it owns retail, sales operations. It's highly leveraged in terms of their business structure, not necessarily as much in terms of their capital structure, but in terms of their business structure. So power prices were to go up because of higher demand. Vistra is one of the big winners.
Vistra's stock has been publicly traded since 2016. Over time, its price has shown steady growth with periods of volatility due to market trends and energy price fluctuations. In 2023, Vistra reported $1.5 billion of net income, a significant turnaround from previous losses. Revenue trends have been positive, driven by increased energy demand and strategic investments in renewable energy.
You know, I think we are always surprised when you see a move the size that we've seen, but I think it's been a long time building. For 7 years, we've been growing our company with this electrification theme in mind. And so we've tripled revenues, we've tripled the earnings power. That's all before this latest wave of AI interest. So I think once we got included in the S&P 400 mid-cap last fall, and then in the S&P 500 this May, all of a sudden we became on a radar screen, but our people have been working at this for a long time.
The company also implements cost-cutting measures that improve profit margins, such as improving the efficiency of current plants, scaling up existing operations, and enhancing storage capabilities. Their price-to-sales ratio is relatively low and could signal undervaluation. However, their price-to-earnings is on the higher side, as recent volatility has caused losses. The price-to-earnings ratio is higher than some of their competitors, suggesting that the market expects strong future growth. Competitors like Constellation Energy follow similar trends, highlighting Vistra's higher growth expectations in the future. Vistra faces intense competition from other large companies like Constellation Energy and NRG Energy, which also invest heavily in renewable energy and energy storage. These competitors could eat into Vistra's market share or provide better returns, which could impact Vistra's stock price. Vistra's transition to clean energy and its strong retail energy presence make it a standout in the market. They prioritize a diversified energy mix of natural gas, coal, nuclear, solar, and wind, and they've made large-scale investments in renewable energy and battery storage.
We just completed in March the acquisition of 3 nuclear sites, 2 in Ohio, 1 in Pennsylvania. So we have a large fleet of nuclear. We also have a very large fleet of natural gas-fired units. Those are actually attracting interest as well because those are flexible units. I think what we have focused on is dispatchable power, which is the power you can turn on that meets the needs of customers when they need it.
Institutional investors hold a large portion of Vistra shares, reflecting strong confidence in its leadership and strategy. They were formed in 2016 after the bankruptcy of Energy Future Holdings. CEO Jim Burke has led the company since 2022. They have total assets of $38 billion and liabilities of around $16 billion, leaving their equity around $20 billion. Their debt-to-equity ratio is manageable, but it could become a problem if interest rates rise or if energy prices fall, as debt servicing could put pressure on their cash flow and limit their growth opportunities. Their assets and liabilities are directly aligned with investments in renewable energy and infrastructure, potentially allowing them to explode in the future as demand increases for renewable energy. Vistra has consistently paid quarterly dividends totaling 89 cents annually with a dividend yield of 0.47%. Vistra continues to return value to shareholders through stock buybacks and increasing dividends as their cash flow improves, making it more attractive to income-seeking investors. Analysts have a positive outlook, expecting revenue and profit growth driven by renewable energy investments. The Energy Harbor acquisition in 2024 positions Vistra as a leader in nuclear energy. The rise in artificial intelligence and other technology sectors, which require significant energy for data centers, could increase Vistra's electricity demand. As a result, Vistra could benefit from a growing market of tech companies and infrastructure projects requiring power.
The advantage of your data center company is you basically site the data center behind the fence line at a nuke. You avoid having to go through the fairly arduous grid upgrade process altogether. That saves you a lot of time, and what we found in our analysis is that time value is immensely valuable for hyperscalers.
Tech-focused hedge funds have been increasingly investing in utility stocks, recognizing their critical role in powering AI technologies. On January 17th of 2025, a fire erupted at Vistra's Moss Landing energy storage facility in Central California, the world's largest battery power plant. This incident prompted evacuation orders and road closures in Monterey County. Vistra is currently investigating the cause of the fire.
Breaking news, a fire at a battery plant just south of the Bay Area. Right now, evacuations are underway, but the big concern is the toxic smoke and where all that smoke is going. This is happening at the Vistra power plant in Moss Landing along Highway 1 between Santa Cruz and Monterey.
And although they have made significant improvements in their renewable energy, it still relies heavily on fossil fuel sources like natural gas and coal for a large portion of its energy production. As the world transitions into cleaner energy, this dependence on fossil fuels could become a liability, especially if regulatory pressures or carbon pricing increases.
There's definitely concern about how quickly can new resources come onto the electric grid. Keep in mind, though, we're retiring resources at the same time, particularly coal resources. The environmental regulations are suggesting there's even more coal to retire across the country. So we not only have to meet the growth of electric demand, we have to meet the replacement of some of these resources that are currently out there.
To see life breathe back into it, it's absolutely amazing.
Moss Landing is now home to the largest energy storage system in the world.
400 megawatts, 4 hours apiece. We can displace 1,600 megawatts of carbon.
Additionally, energy demand shifts or supply chain disruptions can lead to periods of underperformance in a volatile market. Vistra is a solid investment for those looking to benefit from the transition to renewable energy and a company with a proven track record of recent profitability and innovation.